Why banks freeze accounts and what triggers it. If you've ever logged into your bank account and seen a message saying your account is restricted or frozen, it can feel scary. Your first thought might be, did I do something wrong? Is this fraud? Is my money gone? In most cases, your money isn't gone, but banks do freeze accounts for specific reasons, and understanding why can make the situation much less stressful. Let's walk through what usually triggers an account freeze and what it actually means. First, what does frozen really mean? When a bank freezes an account, it usually means you can't move money out. Certain transactions are temporarily restricted. The bank is reviewing activity. It does not automatically mean your money has been seized, you're in legal trouble, you did something criminal. Most freezes are precautionary, not punitive. The most common reason, fraud alerts. Banks use automated systems to monitor for unusual activity. If something doesn't match your normal behavior, it can trigger a freeze. Examples include large or unusual deposits, transfers that are out of pattern, sudden international transactions, logins from unfamiliar locations, rapid movement of funds in and out. The system doesn't know context, it just sees patterns. Freezing the account is often a protective step. Another trigger, suspicious deposits. Banks are heavily regulated and required to monitor for certain types of activity. If there are check deposits that look unusual, multiple returned items, frequent large transfers, activity that doesn't match the account type, the bank may temporarily restrict the account while reviewing it. This is often compliance-related, not personal. Account agreements matter. Every checking or savings account comes with terms and conditions. If activity violates those terms, even unintentionally, the bank may freeze or restrict the account. Examples: using a personal account for high-volume business transactions, excessive overdrafts, repeated returned checks, structuring transactions in unusual ways. Again, it's about risk management. Sometimes it's identity verification. If the bank needs updated documentation or cannot verify identity, they may temporarily restrict the account until information is confirmed. This can happen if mail is returned, information doesn't match, required documents expire. It's administrative, not accusatory. What you should do if your account is frozen. First, don't panic. Second, contact your bank directly. In most cases, the freeze can be resolved by confirming recent transactions, providing documentation, verifying identity, explaining activity. The faster you respond, the faster it usually gets resolved. What not to do. Avoid. Opening multiple new accounts immediately. Rapidly moving money through other institutions. Ignoring communication from the bank. Those actions can make the review take longer. The big takeaway, banks freeze accounts primarily to protect customers, reduce fraud, manage risk, comply with regulations. It's rarely personal. Understanding that makes the situation much less intimidating. Disclaimer plus outro. Just a quick note, this video is for general educational purposes only. Every bank and situation is different, so this isn't financial or legal advice for your specific account. If you've ever wondered how banks make decisions behind the scenes, whether it's transactions, refunds, balances, or account reviews, this channel is here to explain how banking actually works in clear, simple terms. If that's helpful, feel free to subscribe, and you can always leave a comment with a banking question you'd like covered next.